Hi everybody, welcome to another update on Stock Screener. I received a request to make a video on Capstone Copper. It has been a long time since I talked about Capstone Copper. It has gone down from 6.8 to 4.5, almost cut in half. So why is it down? And is this a good buy or not? So before we talk about that, we need to know why we are buying Capstone Copper or not buying Capstone Copper. It all depends on copper. Okay, so what's the outlook for copper? We see that Bloomberg is forecasting a rising copper price. So currently we are at 3.5 and this will rise to 3.8 and then go to around 4.1, come back a bit to $4 and then rise to 4.5. So copper price is going to rise by 20%, 30% in the coming years because of deficits. That's what they tell me, okay? What do I think about the copper price? Well, we have our copper checklist. Copper follows the real economic index, and the real economic index has been falling. It's now below zero, so copper should be falling a bit. We're not positive yet. It is improving. The blue line is going up. Maybe we can even go above zero. That would be good for copper. So watch this index. Other than that, there's the copper gold ratio, which should benefit copper, but we haven't seen it yet. The red line is up, so that should benefit copper. Inventories, we know that inventories are down, and when inventories go down, copper goes up. Now, where do we stand now with the inventories? They are still low, okay? They are still low, but they are not as low as we thought it was going to be. Goldman Sachs said that we would have zero copper inventories by now. We are not there. We are now somewhere here at 200,000 tons. Here, 200,000 tons. So demand has been weak from China. Downstream demand is weak. Housing is crashing in China. So I expect some weakness in copper, at least for half a year. So I don't think it's a great time to be in copper at this moment. Power consumption is still rising, that's good in China. Credit impulse data. I don't think we have an update there yet. Yeah, it's still September. So we will see next week what the China credit impulse will be. But it isn't looking good. You see that the credit impulse is now below zero. So copper is going to be weak for the coming months. Shanghai Composite looks like it's breaking down. Not good. GDP is also not doing well. So in my perspective, I don't see copper going up anytime soon. We do have a copper balance that's in surplus right now, but it's going in deficit, supposedly, because of the EV revolution. But I'm not seeing any signs of that yet. Refined to scrap premiums are still in a positive, so there is downside in copper. Seasonality is good, yeah, so that's a positive point. But other than that, I don't see any positive points. Imports are negative for China, not good. Inflation, even inflation is dropping now, so that's also not good. Economic index, Brave Butter Skelly leading index is also falling. That's also not good for copper. And we also know that China airplane data is down and the Hong Kong real estate market is crashing. I wish to be positive about copper, but I'm not. And that's the reason why we stay out of Capstone Copper. Because there is no immediate positive outlook on copper. Maybe for next year, mid next year, but not right now. Chinese flights are down below the average. The real estate market, as you can see here, this is Hong Kong. And the Hong Kong real estate market is down. Looks like it's going to crater. And that's not a good sign. Okay. So, yep, bearish outlook on copper, at least for the moment. So we need to see better economic data first. Now let's look at Capstone Copper. Where do we stand here? This is our long-term chart with my projections. Projection for this year is lower. Projection for next year, when they bring one of their projects online, then they are supposed to cut the costs. Then there is maybe a tiny bit of upside, 10-20% from today. And in the long term, they will bring Santo Domingo in production. I don't know when. They have been delaying year after year after year. Maybe it goes online in 2030, I don't know. But then there is upside. Okay. But they are delaying this project like no tomorrow. It should have been in production already this year. It's still not even, there is not even a feasibility study. So they're still doing the synergy study. Then they need to construct it, maybe 2 years. And then we're in 2030. So I would focus on this line first. Costs are around 2 point, let's see, 3.3 AISC. That's very high costs, but it's supposed to come down to 2.2, maybe now 2.5, and then in the long run go below 2 with Santo Domingo. So it is a good story. Lower costs, higher production. But when we look at our NPV cash flow chart, as you can see here, I use the copper price from here, from that Bloomberg chart, going to 4.3, 4.1, and in the long term, 4.4. Costs 3.3, 2.2, and then going to 1.7 when Santo Domingo goes in production. We should have 700 million pounds production. Okay, mine life 18 for Santo Domingo. Their other mines are very long mine life. They have quite a lot of mines. Here's the production. So they have the Pinto Valley in USA, is a very long mine life, maybe 40 years. Then we have the green one, and the green one is Manto Verde cathode, as you can see here, has not done that well. And then we have Mantos Blancos, stable. We have the Cozamin mine in Mexico, which is also stable, but this has a lower mine life. And the last one is Mantos Blancos cathode, stable. So production has been going down. That's why Capstone Copper is down in share price, because the production is not performing, mostly because of Pinto Valley and Manto Verde. Okay, but next year we will see some of their projects come online, and that should bring production up. Anyway, let's get back to our NPV flowchart. This is not looking that great in the coming years. Cash flow is very low, even negative cash flow in 2023. And if we assume that they are going to bring Santo Domingo online in the coming years, that's a very big capex of 2 billion CAD. A lot of capex, so that means this NPV goes down first, and then it starts to rise when Santo Domingo is in production. This will have around 20 years mine life, so when you look at the NPV, it's fair value to me, okay? But you need to wait around 15 years before you get your money back. See, the cash flows come in, and then 15 years and you get to your enterprise value. And that's because Capstone Copper has a lot of debt. The debt is around, this is 500 in current assets. And here we have the debt of 2 billion, 2.6 billion debt or liabilities. And that's a lot. So that's the problem with Capstone Copper, a lot of debt. So EV to free cash flow is very high, overvalued, and we don't know when this is going to get in production. It could be delayed for another few years. Let's say we delay it for 1 year, then NPV goes down. Let's delay it for 2 years, NPV keeps going down. So we have no idea yet about Santo Domingo. And if we don't use, if we don't increase the production for Santo Domingo, what would it look like then? Then we could actually just, we could use this and copy it. Let's try it. Let's copy it until here. Yeah, until the capex. What happens then? Then you get this scenario if we don't bring Santo Domingo in production. So you will never get to your enterprise value. Completely overvalued. Of course, with Santo Domingo, it changes to this. and then you do have a tiny bit of upside here. So that's Capstone Copper. I wouldn't buy it. I would buy it somewhere maybe here. 3.5 to 4 would be a good buying point. That's about 40% lower. Okay, that would be my buying point. If this goes to like here, $3.3. At $3, I would buy Capstone Copper. Yeah, that would be a good buy, but not at 4.5. Now, let's compare this to another copper mine. Why on earth would I buy Capstone Copper? And look at this chart. If I could buy Trigon Metals. At Trigon Metals, we just need to wait 2 years. They are already in construction for the underground and will probably go for phase 2 in 2025. And that would bring our production from the current 5 million per year in copper production to 60 million. So that's a tenfold in production, potentially. Tenfold in production. If that happens in just 3 years, right? In just 3 years, then we get this cash flow coming in. And if you look at the market cap, it's currently at 40 million. It is going to go to 350 million. That's a 10x. 10x. Okay? 10x. And I use this. Actually, I haven't even used the same copper prices as Capstone Copper. Let's do that. Let's use the prices that we used for Capstone Copper for Trigon Metals, because Bloomberg is projecting that copper is going higher. So let's use this. Then we get the following scenario: 4.4 will stay 4.4, and this is our projection. Okay, 40 million market cap going to 400 million. That's a 10x. For Capstone Copper, however, there's no X. It's already at 6 billion market cap or enterprise value, and the upside is maybe 7 billion. That's maybe 10 to 20% upside from here at these projections. So I have no idea why you would buy Capstone Copper if you can buy Trigon Metals. So this is probably going to go sideways for forever because of the cash flows that I see. Trigon Metals, however, this is going 10x from the current 0.2 to $2. So that will do like this exponential curve, 10x, 10 bagger. I don't see that happening with Capstone Copper at all. And this is the evidence. This is how the cash flows come in for Capstone Copper, and this is how the cash flows come in for Trigon Metals. This is why I even am invested in Trigon Metals, even though I don't like copper, because of this upside, right? Okay, there are always execution risks involved, but they did bring the open pit online for Trigon Metals. Next year, they will bring it online for the underground phase 1. And they did say that they have enough cash. They wouldn't dilute the shareholders. They have a tiny bit of project financing debt almost in place to have the working capital in place because a mine needs to start up, you know. First there are costs involved and then the revenue comes. And then a year later they will do phase 2, and then we are in full production at 60 million pounds per year from 5 million today. Need to wait a bit, 2 years, and then we get our 10 bagger. So that was the video about copper and Capstone Copper and why Trigon Metals is much better to buy. And I'll see you next video.